This is Eric Muathe from Muathe.com. It is for June 15th, 2020 with another quick educational video. I'm going to show you two time frames as far as the S&P 500 is concerned where there's conflicting information. And again, from a purely educational standpoint, let's see how things are going to play out. So by the time you watch this video, you're going to have the luxury of having seen what the market decided to do after this current situation where we have on the 4-hourly a simple line connecting recent RSI lows is what is coming in play. So I can draw it like that. I'm not sure whether you can see this, but recently over the last day or two we've bumped here twice, and also at the lows of the day. I should mention, by the way, just for the sake of having this, at the lows of today's session, so this is midday trading right now, at the lows of the session, the Dow was down, I believe, 700 to 800 points, maybe 600, I can't remember. But anyway, the Dow was down about, let's call it 700 points at the open, maybe 800. So a big down move in the market, and over the last, let's call it 3 hours, the market has come all the way back and is now almost unchanged. So earlier in the session, the market was down almost 700 points as far as the Dow is concerned. So just we can have that so we can understand what's going on. And one of the reasons why the market could be stabilizing is the fact that we are holding that RSI 50 level, and also we are holding this RSI lows line, and as I stated, this is bouncing with a double bottom support. And also I need to reinforce that as of right now we are holding RSI 50. Now as long as we can defend that RSI 50 level, then the market looks to bounce. From an educational standpoint, we also know that if we end up breaking below this current support line, then that is when any drop is going to stick. So earlier in the session when the Dow was down as much as it was down, it did not stick because this line held right here, and it also confirmed the RSI lows of Friday's session. And that RSI low from Friday's session is this low right here, which was confirmed earlier this morning. Now, this is one view. Now, keep in mind, I should mention that the last bounce on RSI 50 was here, and you can see the market recovered from a swing trade perspective. Now, I want to show you another view, and this is going to be from the 5-minute chart. Now keep in mind here I am using RSI setting of 26, and the reason why I do that is so that I can remove a lot of the noise that can be seen on the small time frame. So let me update this. Now we can see here, and I talked about this for paid subscribers over the weekend, that the market has been coming back to this topside resistance line on the SPX, and market's been pulling back. So let's take a look at those areas. So we can see that was the top recently. We came close here for another pullback area from a swing trade perspective. We tag that same level here for another pullback area. Whoops. And same thing here for another pullback area. So what I'm saying here is a couple of things. It could be that now we are moving above the blue line, which is a breakout, and I call this method the swedge breakout. If the market can hold the RSI above that level, given that the 4-hourly is already showing support, as long as the market can continue building above this, then it means that the market's next major trend is to the upside. And we also know from experience that if the market ends up having uniform activity back below the blue line, then that means that this intraday recovery is actually a trap and that if the market was to coil back below the blue line with uniform action, then actually this would be a short-term entry with a bearish outlook. So in other words, right now you do have all the reasons to be playing this from a bullish perspective, expecting higher prices, because the market is clearing the topside resistance line. So let me just show that one more time. We can see that if we take this topside resistance line as such, we can see the market is above that level. Now bring back the 4 hourly, and we can also see that as long as this line is holding, then that does favor a bounce. Now, if we end up breaking below this line, that would be a sell signal. And if we end up coiling back below this line with uniform action, in other words, if it looks, let's say, as an example, if it looks like the market does something like that, back below the blue line, then in essence, this movement above and back below the line would be a sell signal. Now, this video would not be complete if I failed to mention one other observation, and it is this line here. The reason why I say that is from the uniformity concept, we can see clearly that this came off the highs there with a gap down. Now what we do, of course, we take that information and draw a uniformity resistance line. And anytime we have uniform activity rejection on this line, then we know that the market is telling us that the swing trade is favoring movement lower. And we can see all of this, the market has responded with a bias to the downside. So if we take all this, we can see that there's also an emerging possibility, even at current levels, that if the market stalls here and starts pointing down, then that in itself would be another instant of a pullback area. And to be honest, this is one of the reasons why trading gets confusing, because you can have multiple time frames and sometimes even the same time frame giving you different looks, different conclusions based on your point of view. This is Eric Muathe with Muathe.com. As always, good luck, love and light, light and love. Namaste.